All right, people, Bruce with Targeted Wealth Creation. Yes, I know I haven't been doing a lot of videos, and thank you. Most of you noticed, missed me, or missed my expertise and mentioned it. Just a little update for you guys. So I jumped into this because when I saw the income funds initially, I was attracted to that. I'd always been an option guy, over 40 something years investing, managing my own money. Um, was able to retire through the decade of the 2000s after the dot-com bust, where I had a lot of equity and stock value and lost a fair amount of that, but still had enough money and sort of managed that money through an early retirement because I did about 8x on my money in the 2000 decade. For just a quick back to that. So what that taught me was, how can I make up for, I thought that, like everybody, I thought the NASDAQ and the dot-com was just going to go higher forever. And this is the new um, environment. Well, it really wasn't. I remember being part of a investing chat room when the internet was very early. Some New York real savvy, anybody that remembers Waxy Michael Parnas, and he started saying, "Hey, the Nasdaq's going to go from 4,000 to 1,500." I thought, he doesn't know what he's talking about. I work in tech. I know this. I know that. Yada yada yada. Well, the guy was spot on, right? And I wasn't invested that much more. I just owned a lot of company incentive stock that I had built up through tenure and time. And so I had a lot of, relative wealth, millions of dollars, and just saw most of that get wiped out, about 70%. So I said to myself, I went through an ugly divorce, just everything hit me at once. And I thought, well, I want to be able to retire in 5 to 8 years. I'm burnt out after going through this. And, how can I generate a lot of income on what I do have left? I still had, a little less than $1 million, but I had the opportunity, I thought, to grow it. Well, not only did I grow it, but I 8x'd it. Wasn't that full amount that I invested, but I just sat down and focused and said, okay, what's going to happen? Is it the S&P 500? Is it the NASDAQ? Obviously, it's not the dot-com. It's not techs. And I sort of discovered commodities, oil, precious metals, and miners. And so I just started studying and investing and trading, and just from 2001 through 2010. And I made so much that I just retired. Said, I don't, need to do that. I traveled, I lived in Asia for a while, came back to the States, did a number of things. And was hoping that that would continue in the future. Then we went right back to the S&P 500. We went back to the NASDAQ, and you've all seen what happened, 2011 to where we are now. Well, if they always say in history that things rhyme, they don't necessarily repeat exactly, but they rhyme. So it's clear to me that the traditional NASDAQ tech stocks, even though AI will help and there'll be certain, like you guys all know, I love Palantir. But in general, I think the indexes, the S&P 500, the Russell, the Dow, everything is going to have a hard time doing 1 or 2x in the next 8 years. Well, that still gives you 5, 6, 7%, but you're going to have down years where you're down 20% on the S&P 500 for the year, or the NASDAQ. So everybody that just thinks the FOMO is going to continue, well, what will continue? There's always money movement, the velocity of money. So I see that going into commodities, and I've been positioning myself. So as far as these income funds, I don't personally buy these a lot. I've saw this run up. we may run through the end of the year, although I think we're very close to the top now. I think if we saw 6,100, it absolutely would be the top, but we may have topped already. But it doesn't matter what the number is, or does it take till December and we get through elections and we get to 6,100? The point is, these things are too richly valued and they will come down. The higher they go, the harder they will fall. So if 59 something ends up being the high, they may only retrace 20% now, come back, get near the top, go back down, and you may work your way to a 15, 20%. We may end up with a 40% pullback over the next 13 months. It's hard to know. I watch and learn. I can look at historic information. So I know you guys are tuned in to Roundhill. So this is my little rant. I'll be done in just a minute and I'll get into Roundhill. But since I hadn't done videos, I thought, why not? I'll just tell you what I've been doing and what I've been investing in and why you haven't seen me. Okay. But I still want to do these income funds in just a reporting basis. I'm not in them. I'm not buying them. Okay. Pretty clear if I said to you, I think it's going to, the downside in the next 4 months is much greater than the upside. Why would I go into these as an income source? Because I would have NAV erosion. So there clearly are other things. So if you go back and you look at my last video on commodities and what I recommended in the silver stocks and gold stocks and that kind of stuff, then you'll see exactly how well I've been doing in that. No, look at AGQ for physical silver. Look at, MAG silver. I could go on. There's probably six more. AEM. There's little juniors that I own that are just going to go up 6, 8, 10, 20 times in the next multiples of years. So that's been a bigger focus. There's some energy plays, something I just bought, Chinese stocks. They ran up really high, pulled way back. But if you look at the PEs on KWEB, KBA, they're ETFs. They're not income oriented. They're just, even Alibaba will do well. Now, I'm not going to go out on Yomax and buy it. I can do way better buying the stock and doing my own options. You guys that are just in love with the yield max and income funds, they're okay to put some money in, but they're not an investment strategy. I know some of you guys want to trade them, but why don't you trade the underlying? You don't bother to try and trade the index. You can time when you put money in there, but to me, that's a lazy man's way to let somebody else make your money for you. Well, we've all seen, and I learned firsthand, I thought the idea was great until I watched the execution. And guys, trust me, go look at GDXY. I'm killing it in a lot of GDXY stocks and even in some juniors, right? Like a GDXJ more oriented. But look at Yomag. They're not even back to par on their $20 that you invested in anything. You look at a GDXY chart, it's going the wrong way. And you look at GDX and it's going the right way. So I ask you, why would you be in an income fund when you're getting, NAV erosion? Well, yeah, but I get some income. Well, just sell some of your stock along the way and you're going to get income too. And you're going to make a lot more money in that kind of approach. So that's where I've been spending my time. Why would I do something for $25 an hour and grind out a bunch of videos? Yeah, they're helping people, but they pay me almost nothing and they distract from my investing time, right? So that's why you haven't seen me do so much. All right, let me jump in here. I owe you guys that. So I'm bullish on uranium. I'm bullish on oil, although I don't think oil's going to take off yet, but I think we'll see $125 oil mid to late first quarter next year. So I'm bullish on that. I think the grains will really get running. Obviously, the metals and miners are just, they stand to be the heroes. They'll outperform the S&P 500 massively over if you measure those kind of things over the next 4 years. All right, all done with that. So the first 9 minutes is Bruce's rant. All right. But if you look at what I said and go analyze some of it, you'll figure it out. I know some people say, well, Bruce, I'll keep that in mind. It's not where I'm putting my money. Well, then why do I want to make those videos if nobody cares, right? It's just a wasting of my time. All right, so here we are. How did XDTE do? Okay, 1023 to 1024. Okay, you have to buy on Wednesday 1023. Declaration, X date, pay date, nothing changes on XDTE, QDTE, and RDTE. They're all the same, right? XDT is the S&P 500. So must buy on Wednesday. You guys know that. Okay, what was the payment? Look at this. It was up from 21 cents to 23 cents. But overall, XDTE was down 1 penny week over week. So we went from a 21.41% yield to a 23.60 yield. Well, how does that look? And again, I mentioned this last time. Somebody asked me to if I could analyze this stuff on a monthly basis because they see this wide variance. Well, you can do it, and I'm doing it, and I enjoy doing it. But you still see a wide variance, right? And the one thing that you'll notice, because the math when you do weekly, 4 times 12 is 48. Well, there's 4 extra weeks, right? So every third month, you get a 5-week month, and October will be a 5-week month. So far, you had a 5-week month in April. So you have to be careful when you're comparing it, right? And what's ironic is your biggest month to date, $1.50 worth of, was only a 4-week. So that's massive. That's 38 cents, something like that. It's under 40. 40 would be $1.60. So I'm just guessing around 38 cents to get to $1.50, almost $1.54. So that's massive. And yet you go here on a 4-week and you've got a perfect 22-cent average here. And guess where we are so far in October? Now, October will be a 5-week payer, guys, right? Because we've got 10-2, 10-9, 10-16, 10-23, then it'll pay on 10-30. So just keep that in mind. And then we'll go November and December will be 4 weeks, and then January should be a 5-weeker. So that's what's happening there. So I didn't want to put the chart until October's done, right? So it's looking like you're only going to have about $1, $1.02, $1.03, something like that, maybe $1.08, maybe $1.10. So it's going to be about the third highest, but it's going to be a 5-weeker. It'll be higher than this 5-weeker, right? It'll be probably under this one. So it'll be between these two, 4-week and a 5-week, and clearly under this one. All right, let's move on to the NASDAQ, right? The NASDAQ 100. Boy, look at that payment, peoples. I don't know that we've had any payment that low. Oh, there's a 19.7. And there's and a 14. Oh my gosh, boy, did it get killed on that. Okay, I take back, I didn't really analyze it for you up here, but I did a lot on the chart. So the yield is 25.35. Why is the yield higher with only a 20-cent payment and this is a 23? Because this is a higher price fund, people. I think most of you know that, right? So when you look at my summary data, which I'll go back to, QDTE yields much more in pure yield than the S&P 500, but the total return because of the NAV reduction on the on the NASDAQ, you actually net more money up here. Now, some of you like the fact you get the use of it along the way and some of those arguments, and people call it ROI and that, but I still like total return. And then you do what you want to do, but you can't avoid looking at it. All right. So let's take a look at our chart. and see how that projects out. So we're up to $1. So we've just about gotten to this 4-week pair. So far, this looks to be, if we analyzed other 4-week pairs, okay, this looks to be the lowest 4-week pair so far of any 4-week pair. So assuming we get between 20 and 30 cents, will be somewhere $1.21 to $1.31. How does that stack up with our 5-week pairs? Well, it beats this 5-week pair if it's $1.21, and it clearly doesn't beat the July. So those were the two biggest. And look, August on everything so far has been the biggest pair, whether it was S&P. So the markets obviously did well there. Now, what I'm doing here, I haven't put my chart together because first off, we got another week and they don't even have a comparative. So I probably won't even do a chart till I have November 4 weeks to compare to 5 weeks in October. How can you do anything with September? A chart, no sense on doing a chart with one payment. So don't say to me, hey, Bruce, where's the chart for RDTE? I will get there, people. So far, whoops. Oh, yeah. It's at $1.27. So what I wanted to sum up here, even though these are priced at different numbers, right? QDTE and RDTE are priced around the same, the $42, $43 range. Okay, this guy's up at 52, right? So you can see RDT is outperforming still for the month over QDTE, and for that matter, this week as well. All right, so let's go take a look here. This is what a lot of you like to see. Now, I know you don't like me picking 3/7 and 9/10, the inception dates, but I got to pick something, right? So how we doing? Well, XDT, the S&P 500, continues to stay positive. While it was down 1 penny over last week from 52.71 to 52.70, it's still higher than its original inception, right? Back on March 7th, both of these funds launched. So the dividend return, while that's only 14% versus 20%, okay, but where you have a minus 8%, right? And that's over 230 days. So when you annualize that, you get a minus 12%. Here you have 46%, 0.46. So when you annualize that over, 2/3 of the year, so you got another third, it kicks up to 0.73. I mean, minuscule. But guess what? You're going up instead of going down. This is going from 32% annualized return, right? You got a 20% return over 230 days, so you'd have a 32%. And when you subtract the loss, okay, you're at 1968. So in my book, XDTE is still total return outperforming. Now, I went over this last week. This is skewed. Why? Because of a small sample, right? It's like I flip a coin twice and I get 2 tails, or 4 times and I get 4 tails in a row. And I say, well, the odds, of getting a tails are 100%. I flip it 1,000 times and I get 501 heads and 499 tails, right? That's probably a realistic number. It's going to get very close to 50-50. So a small sample just skews things, people. All right, guys, sorry about the rant in the beginning, but I think there's a lot of wisdom there, people. I try and take you through some of the things that I learned and I did. And let me know. I mean, if enough people tell me they want to hear and see what all I'm doing in the metals and in like my recent foray into the Chinese, why am I even in those Chinese stocks? Because the Chinese government has pushed a lot of money, right? And so they flew up. I knew they would retrace 50%, and now they're getting ready to go again. But I think over the next couple of years, compared to the US markets, Alibaba's in that group. Some of these funds, their PEs are $4. Why would I want to buy an American stock with a 26 PE or a Chinese stock if they both do the same thing with a PE 4? I mean, China stocks are going to grow. Their economy is still growing. It's gone through hell recently, and that's why the Chinese government is doing a QE, if you will, right? We've done so many QEs that they don't have much effect anymore. But the Chinese government's still able to massively help their market, and especially where they trade some of these A shares on the US markets. All right, guys, that's what I got for you on Roundhill. Again, I hope this was helpful. Hope to hear from you. Let me know in the comments your thoughts, what you'd like to see. I will do a few videos, but I'm not going to. I mean, at one point, I was doing 4 videos a day. I mean, I may do 5 a week, but that's it. I'm not going to do any of the yield max. I just have no interest in covering the yield max funds, guys. Even though there's some, like if you had to buy one, go buy Palantir, go buy GDX, or go buy Alibaba. But honestly, trust me, yield max will find a way to screw it up, and you'll make little to no money. I mean, GDX is the prime example there. All right, guys, that's what I got for you. Bruce out again. I'm not a financial advisor. This is not financial advice. Have a good one. Bye for now.